Hi, good morning. Thank you to KSI, Dato, Michael, and the entire team here to provide us the opportunity to delve into what's happening with the economy, digital banking, and we actually are coming out of a very critical time, insolvency everywhere. At the same time, we have industry legends over here from the traditional banking sectors. I believe my colleague over there has already introduced the panel, but I will still want to go through and introduce them one by one. Mr. Abrar Anwar is the Managing Director for Standard Chartered. Standard Chartered is one of the key players when it comes to fintech. Very, very progressive to participate with digital companies. They have done partnerships with Ripple and various other new tech firms. And while the discussion today is about the game-changing, I'll get into once I start going, I'll get into it. I'd just like to say a few words first. COVID has basically played out a death jolt. The economy was already very bad. We were slowly going lower and lower. And COVID just suddenly arrives and it just washes out practically everything, something that we've never witnessed before. And when we come out of it, or we are still in it, everything has transformed to a significant degree. Customer behavior, the retail sector, SMEs, and this also throws up a huge amount of opportunities for providers of capital, for banking as well. The other thing that has happened is we can no more say I or E for technology, because practically everything is enabled by technology today. Be it the traditional bank, be it the new fintech companies, they practically, all these other providers of capital, alternative capital, are in some fashion, they also are a bank. It's just about the transformative process of how it's going to happen and how the banks will want to handle those strategies going forward. But the pie is shrinking because on one side of the whole transformation is cannibalism that is occurring. So you take business away from someone else. So in the bank, now the bank is losing a pie in the loan market, probably some competition in the SME, some competition in the remittance side, some competition on the investments and all that. And then you have new technologies that are coming up, which are innovative, because innovation enhances. It doesn't cannibalize. Right now, if you look at in the technology space, so what we want to discuss today is we want to look at how this disruption, how much of this disruption is actually innovative, and how much is cannibalism. How are traditional banks responding? How will they respond? Will they respond by creating their own value chains to some fashion? Because eventually, if they're going to keep on losing business or some sort of business, the pie is also shrinking. Will they go out there? With what strategies they will go? And what are the prospects for a digital bank? Any enabler of capital alternative finance, crowdfunding, peer-to-peer payments. If you're doing a wallet, you are eventually taking or getting into the banking space. So, and there are many new models, for real estate, there is a different model. There's lots of models out there. So hopefully our panelists over here can throw an insight and give us some direction with how they see they could respond, and how the economy has thrown up some opportunities for them, and some of maybe the legacies, previous processes have to be removed. Then what will those be? So I could ask Mr. Anwar to go first, and he could throw some insights into all of this. Thank you.
Good morning. Good morning, all the guests here, and also fellow panelists. Thank you very much. And first of all, congratulations to KSI to come up with this very important topic. More so with this COVID-19 situation that has emerged, and we have all got into a situation of enabling our customers to do banking. So the question of digital bank, digital banking, banking digitally is sort of, it integrates together. So I will try to give some perspective from Standard Chartered's point of view, because we are considered a traditional bank, right? And the oldest bank in Malaysia from 1875. So almost 145 years. So to cope with the evolving changes in the environment, how we are coping and how do we see. So I'll try to just share some of our perspectives from here. Just to give some data to share with all of you, digital has changed the whole of financial industry, not just the banking. So that the whole ecosystem has really changed. In 2019, 20.3 million Malaysians made digitally enabled payments transactions. Whether you want to save, invest, or insure, you can do it at your fingertips in real time. Going digital puts all players on a level playing field. As you know, as the foreign banks, we could not expand the branch network as possibly the local banks could do. But today, enabling banking through digital platform has taken away the advantages of physical presence. So it's more the technological investments and the capability puts the situation on a level playing field. I mean, that means we can serve a customer wherever the customer may be, not necessarily in proximity of our physical distribution network. So what are the customers looking for? They're looking for a quality service rather than being physically present. So how we can enable that, how we can make it available is critical in this digital world as it's evolving very fast. COVID-19 pandemic has opened up, I would say, new opportunities as well. As there are challenges, there are opportunities. And when the MCO was instituted, we actually had to start operating with 76% people working from home. So initially as a CEO, it was mindset-wise pretty challenging for me to think how we can run the bank with so many people not coming to office. But thankfully for us, with the investments that we have been making in digital platform, we could immediately transform the entire bank operating remotely. So it was like business continuity in action, whether we can serve. And we have not missed a beat within this period with so many people working from home. So which tells us that technological investments and right kind of technology can enable supporting an organization from wherever we can operate from. So that was a big finding, and we have almost 87% of the people digitally enabled in terms of our customer base. So there were a lot of customers who would not embrace internet banking or phone banking, were actually sort of no other choice. They didn't have any other choice but to embrace that. So we have seen massive growth in adoption, digital adoption, and also channeling of transactions from there. In the interest of time, how much time, moderator, I have? Another 3 minutes? Okay. So I have to go very fast. Anyway, so just giving a quick perspective on our digital investments. The bank has been investing almost $1 billion in the recent past for digital platform development. And what we have seen, there are almost 155% increase in online banking, 253% increase in mobile banking active clients, 87% increase in digital payments, and 20% decrease in check payments. So it's been a very fast track growth, I would say, that going forward. Of course, we can't be left behind, so we have been, as the moderator also mentioned, there has been a lot of awards that we have won because of our digital investments to enable customers to operate digitally with us. So that's why it's a bit of a merger. I mean, you have heard about the digital bank license being given out, but in fact, with our current license, we can operate the bank full digitally. So there is no bar. So the differentiation would be is that a digital bank itself would be a separate bank in itself, rather than traditional banks also can be fully digital and also having physical presence. So it's sort of an hybrid model, but we have seen that people, though earlier would like to come to the branches, but it's coming down. The footfall in the branches, the transactions are all coming down. People are able to do transactions instantaneously. Because I remember when I started banking, for making a transfer, it used to take like, you do vouchers and then it goes to the data center, and at the end of the day, it gets processed. Today, you can do it in just 1 second, this transfer. So that transformation has really happened. Online banking services, we are 100% common banking services can be performed digitally. I mean, anything you can do without moving an inch, that we can do, from either through internet or through mobile applications. Video chats, text chats, everything is enabled. So the disruption that is happening, the traditional banks are also well prepared. It's not that we are saying, I see my friend from OCBC, Dato, is nodding. I mean, because I'm sure all of them are equally enabled to support the customers. So just wanted to assure our customers that, look, we are not behind. We are there to face the challenges from the challenges in the market. If you look at what the fintechs are doing, they are picking up cherry picking. Cherry picking maybe the payments or maybe the collection, a little bit of wallets coming in. But the holistic banking services, the traditional banks are investing to enable, as well as collaborating with the fintechs to take the best and support the customers. As I mentioned about our mobile application, 1 minute, right? As a mobile application, it is very high tech. You know, you can do biometric login, Face ID, there is inbox notification, anything you can do. And there is also just a free format service request. You can just write, hey, I want to do this. And that is also possible. So enabling banking fully digitally is already there, and traditional banks are investing to make sure that we are remaining relevant. Because I think the moderator mentioned that will it be disrupting us to the extent that we will be extinct? But I would say not so early, not so soon. So we are all ready for it. So I'll quickly go through some of my slides. I don't think I'll have the time, maybe during Q&A we can come back. Real-time onboarding is another interesting development that digitally we have enabled. It's like you can just sitting at home or from your mobile phone open an account, get a credit card, get transactions done. It is not a future, it is present. It is happening. So that is there. Similarly, wealth management. All investments in UT and insurance buying, everything you can do online without moving an inch. So those are the fruits of the investments that we have been making. So I would say that in terms of disruption that is there, yes, unless we are embracing the challenges, we will be falling behind. So lastly, I would share some of we are very proud of this one. This is our Global Command and Control Center, very high-tech investment that in Malaysia. We have got our 5,000 people working in the global business services. It's doing artificial intelligence, robotics, cyber forensics, everything is happening here. So we have that investments here. This is a real picture of our Global Control and Command Center in Bukit Jalil in Kuala Lumpur. Lastly, some of the fintech investments and the partnership that we have is like Ripple, Socash, Paxata, Symphony, Instabase. These are all enabling our own capability to support. Like Socash is something you can take money from any vendor. As you're doing shopping, you can just take. So we have made these investments in these fintechs to enhance our own capability. So I'll end here as I'm running out of time. It's actually exciting times. We need to remain agile. We need to embrace the challenges and move forward. So lastly, with 145 years in Malaysia, of course, all our investments are bearing fruit, and we are thankful to all our customers who have been having faith in us over generations. Thank you very much.
So to recap, Mr. Anwar's perspective is digital is inherent in most processes, or it equalizes the level playing field. It is data-driven, customer-oriented, so it's dynamic in nature. As the data comes along, the customer itself is able to tell what services are required, and they are able to adapt. They have invested in various platforms, and there would be a question that we would like to put forward, but we'll get into the Q&A session, whether it is good for a bank to have multiple services under one umbrella, or to power individual services and individual teams with the legacy engines that they have, rather than trying to put it under all in one marketplace. We'll get to that. I would like to ask Mr. Goh Ping Hui to give his perspective. He's an industry veteran with a lot of awards. I understand Silverlake is now also a digital bank, but it's a enabler for most of the banks in Malaysia. So he's actually captured selling all the tools and shovels to the money guys. So Mr. Goh, if you could please give some of your thoughts.
Okay, today we are talking about digitization, and of course the next thing is economy. And of course under economy is called banking. Now, being a scholar, I do not want to talk things without a definition. To me, digitization, when I was in IBM, and that was 1988, I said it is mathematicalization. You digitize, digital basically means Boolean algebra, Now, you apply Boolean algebra to things that you call it digitization, which is actually mathematicalization, which actually what I have been talking for all the years. The second thing is about economy. So what is economy? Well, economy is a bit more tricky because if you start from Adam Smith, David Ricardo, and so on and so forth, and then the Keynesians, and you have Virginia School, you have the Austrian schools, you have all kinds of schools, and you have the neoclassical, and so on and so forth. Now, so what actually is economy? If we do not know what is economy, actually, even you know digitization, actually, you do not know what will happen. So the important thing is to ask, what is economy? Now, I hope there are charts. Can we move? How to move the charts? Okay, it's okay. I think I actually define economy this way. Now, economy is about repeating all emerging habits. Now, guided by expectations and purposes, but always housed in mathematical structures. And we call those human actions within those structures choice actions. Now, these few words is actually very tough because it triggers Louis from Mises' human action theory. It triggers choice theory. It triggers game theory. Habits, as Aristotle said, it is about we are what we repeatedly do, and excellence is an habit and not an act. So, of course, surviving in economy is about excellence. So this is how everything is linked. But actually, you can look at a group of mathematical equations, and you can see all the correlationships about game theory, group theory, banking, statistics, quantum theory, and many other. Now, this is the groups of mathematics that I wrote many years ago. In fact, I irritated my professors because I said physics is a small little area of mathematics, and because he's a nuclear physics professor, of course he doesn't like that. Okay, so we are not going to this complicated issues, but I just want to position the problem. It is not easy. And when I heard Abrar say, okay, spending $1 billion US, I think that is what you have to do for Standard Chartered. So it's a great strategy. I think they have grasped the strategy because digitization is neutral. There is no such thing as good or bad in digitization. There is no such thing as big or small. And so what will happen if it is so mathematical and it's so neutral? Then you have a big problem because all our histories are built based on expectations, based on the definitions, and which means it is not neutral. So what will happen if the whole society, which is not neutral, is moving into a neutral world? And actually the answer is quite obvious, that it is top-down, bottom-up, and mezzanine, right? Which means if you look at how we structured knowledge through the 5,000 years, it is called adjoint, which is bottom-up. Means we add knowledge to knowledge. So 1 + 1 = 2, 2 + 1 = 3. This is how we build up knowledge. And if you don't believe me, you go back and check any knowledge, and you can see it is added up. And that is called bottom-up. But then there are knowledge which are not added up. It's just a fact that sun will rise. Oh, it is not derived from anywhere. Sun will rise. Time tells. Okay, and a lot of us agree that the world is going digitization, right? So it's more or less conclusive. So I think today, what is our interest? Our interest for you, for me, I think our interest is to know what is going to happen. And I think broadly, which is our business, basically the world is going to be more and more about finance. And you call it banking, you call it anything, it is about finance. Okay, and the second thing is, there will be a part of so-called finance, which is actually not finance, because mathematically they don't belong to the same group, which is called insurance. They actually belongs to a statistical group. Banking has a characteristic that is called, it does have, in mathematics, it's group theory and semi-group theory, but it is actually called quantum. The relationship, like customer relationship, is actually quantum statistic, which is different from insurance statistics. And these are the things that will move. It's going to move to finance, not just banking. It's not digital bank. There's nobody going to win. The traditional banks has an advantage because they have the money, they have the talent, so they dare to spend $1 billion US. But if you're going to have a new startup, do you dare to spend $1 billion US? Now, I lost in China because I dare not spend $1 billion US. Okay, and that was to Alibaba. We started e-commerce in China much earlier. We lost because I dare not spend $1 billion US. Okay, so it's not about how intelligent you are. Well, Charles Darwin said it is not about how intelligent you are or how strong you are, but it's how adaptive you are, right? So I think we can summarize that the world is going to move on to a finance world, and it's very complicated. You know, if you look from the top-down economics, you have something called helicopter money. Now, US is printing the money like nobody's business, and you better understand how this money affects you. And I told my people, don't talk about price-earning ratio anymore. Okay, there's no more price-earning ratio. It is all about what is your potential. So it is about a company, it is about individual. What is your potential? Why? Because people buy potential now. Because as you print money, where you spend the money from? You don't buy bicycles, you don't buy cars, you buy potentials, you buy future. Right? So you said, I don't understand. Well, there is a business that actually rests on potential. That's called wine business. Okay. Now, if you start counting wine and say, well, actually, it's how many grapes made a bottle of wine, how long it ferments, plus the cost of banking cost, and add up the infrastructure cost, a wine should cost $3 US. And so somebody brought you a Romanian Conte and say, well, I offer you 5. And they say, well, let's don't talk. It's just a waste of time, right? Because Romanian Conte would expect you tens of thousands US. But you will say, no, it's only $3 US. The cost is $3 US. You cannot talk tens of thousands. That is thousands of times, which is weird. But this is exactly what's going to happen. Now, so basically, I'm going to sum up that the world is going to be very weird. The finance world is going to be very weird. And weird means you need statistics. Therefore, insurance will change. Insurance will become more will flourish because the more risk, the insurers like it. Because without risk, there's nothing to insure. The last part is, so what happened to SMEs? What happens to all of us? What happens to healthcare? What happens to every industry that is not this mezzanine industry like finance, like insurance? What is going to happen to those people? And well, I'll point to one reality. Google is investing in cloud. Apple is investing in cloud. Microsoft is investing in cloud. Huawei is investing in cloud. Alibaba is investing in cloud. Everyone who has money is investing in cloud. So ask this question, are they stupid? They don't have researchers? They are the brightest people in this world who knows what is going to happen, and they all invest in cloud. Now, it means cloud is going to be a future. But it isn't. So you can see the induction of crowd to our society is basically Google throw money, Apple throw money, Microsoft throw money, everyone throw money. You know something's going to happen if everyone throw money, right? But for more than that, China just printed central bank digital currency, CBDC. So why you print central bank digital currency? It's called induction. Money induces, the role of money is actually induction. It induces innovations. So what will happen is, money, CBDC is definitely a crowd, right? There's nothing in there. It's just all digital numbers. So deep CBDC is definitely a huge crowd. And that is going to induce all the crowd. So you are going to see the world actually being, I don't even know what is a verb for crowd now. Basically, crowd dies. I don't know what is the right term. But okay, I'm going to answer the last question. What is our role? What is our choice? What is our future? Now, in Silverlake, we have this group called Multi-Crowd Mezzanine. Now, if you look at Silverlake since 1990, since I published the theory, we have been looking at mezzanine. I knew long ago, I can't win. Fighting with Google, fighting with Microsoft, fighting with IBM. There is nothing for me to do because I don't have money. I can't win the young and the people who wants to price 5 million, 2 million, 1 million. I can't win because I can't employ top executive at millions. If I employ top executive, I have 20-something executive that is at millions. If I price at 5 million, I die. Then I have to subsidize, right? So you can't get talent if you pay peanuts, you get monkeys, okay? So the problem is, so what am I going to do as a person? And I see mathematically there's something called mezzanines, and that is the boundaries between the mathematics. Now, while the mathematics has very clear equations, 4 groups of equations, you can give it to any few medalists and read this equation, they will tell you yes. But where can we survive in this equation is the boundary, and it's called mezzanine. So it is basically mezzanine is banking and finance. That's why I started banking and finance. Insurance, that's why I have an insurance exchange, which covers the whole Asia now. And then the last part, which is called mezzanine, multi-crowd mezzanine. You ask me why? I say, you ask Google why. But I want to survive, so I play a mezzanine. Thank you.
Thank you, Mr. Goh. Very nice and very good insights about financialization of the future, where probably there's a lot of more money going to be printed electronically, and maybe even UBI type of payments. It's going to be the norm after COVID, and everybody is doing it. And in that, and probably for that reason, the payment providers, it's very good business for them, because the government comes out with 20 million to promote for induction. So the providers, the digital payment providers do very well. And we have Leong here, who is the largest payment company, e-payments processor in Malaysia, and probably Southeast Asia. They provide, they clear payments for Lazada, Shopee, and all the big e-commerce platforms, and including offline payments as well. I'd like him to give us a few insights as well. Thanks.
Thank you. I think the message is very clear. Technology is the key. Let me reiterate and reaffirm this message. There are so many great speakers has been talking about the importance of technology. Now, being a mathematician, I also tak boleh kalah lah in terms of figures. Dato' Charon use figures, I also use some figures. I do a quick check. You know the market cap of Amazon? The market cap of Amazon is now at 1.6 trillion US dollar. And if you take the whole Southeast Asia, South Korea, the entire companies that are listed in South Korea share market, their market cap is only around 1.3 trillion. Let's look at our neighbor, our Singapore neighbor. We always look at Singapore as being the gauge. Kita mesti mau kalahkan Singapore. Now, Singapore, 700 billion US dollars. That can't even beat one single company as big as the Feng. You know the Feng, the like of Facebook, Amazon, with the exception of Netflix, as well as Google. Now that is the key. If a lot of bankers and entrepreneurs here, if you still question whether technology is very important tools for all of us to move forward, I think you have to really think twice. Figures never lie. Now, I would like to share with you some of my thoughts. The more I put my thoughts into slides, I think age is catching up. We don't used to carry notes. Now we have to carry notes because cannot remember so much. Now let me share with you what are the digital trends that affecting the financial sector. Now, of course, it's a bit small. It's okay. I does it on purpose so that you concentrate on me rather than the right things. Now, the first is the rise of mobility and broadband. This is very, very important, especially the 5G. It means that faster data anytime, anywhere. Now, the previous panelists, Datuk Wong, Datuk Chye mentioned, where are the bank branches? Where are the bank branches? The bank branches are in the mobile phone. Now, because of this broadband where it allows every one of us to do banking anywhere, everywhere, that is the key, right? I hope this is key point number one. Second is the rise of digital consumer. Now, a lot of us never ignore the millennials. All of us I see, we are beyond millennials. Some they are millennials here. And I always advise a lot of my fellow entrepreneurs, and I say, look, if you want ideas, don't talk to the Gen X, the baby boomers. Don't talk to those who have money. These people are, their journey to heaven is shorter than the journey to the bank. So these people, they just want to know how to retire and enjoy their money. You must talk to the millennials. These millennials give you ideas that you never even think about it. That's why during this MCO, I actually got the opportunity to spend a lot of time with my children. And we really debate and argue on subject matters. And the millennials, my children, they actually list down the rules of the debate. Otherwise, Dad, you are irrelevant in this discussion. And you have to accept the fact that you are irrelevant. What I'm trying to tell you is, please don't be irrelevant if you decided not to speak to the millennials. That is my point, the home point. Now, of course, the millennials are the Gen Alpha, Beta, and Theta, and so on and so forth. Gen Z is considered the entry level of millennial, okay? And what I want to share with you, things like, this group of people, they love unbundling of finance. Millennials never like packages. Millennials never like complicated things. They want simple, straightforward, and fast. Right? I hope this really opened our eyes. Now, the third trend, the rise of digital ecosystem. This is very, very important. You look at the open digital platform. Now, people are talking about social commerce. And social commerce is going to fly. You know what social commerce is? Social commerce is it's just simple idea. That's why millennials are very straightforward, simple. Their simple idea is very simple. I use a product, I like it, I share with my friend. By sharing with my friend in a social commerce platform, and I make money. Simple as that. Now, if you really want to capture the millennial market, you must think simple. Don't think like the traditional bankers. Traditional bankers are very complicated. Oh, first must have bank account. After bank account, give them loan, give them this, give them that. Must have all this KYC, blah, blah, blah. Very complicated. If you think you want to repeat the same, think twice. Now, the rise of rate war. I want to introduce you a finding or a research done by PwC. I'm not from PwC here. Neither I'm an alumni of PwC. But I think PwC did a very good articles on the new world. They named the world by colors. The red world, then you got the blue world, you got the green world, and you got the yellow world. Now let me share with you specifically related to digitalization, we talk about the red world. The blue world is what I told you just now, the FANG. People like Amazon become so big that it is even bigger than the nation, and that is blue world. Now what is this red world? I actually summarized some of the key takeaway about this red world, where innovation rules. And take note of that, innovation outpaces regulation. Now, just now from Osman, from, with due respect, from Silverlake, yes, the current banking ecosystem, the legacy is so complicated. The SOP, everything is so complicated. Now think twice, because innovation outpaces regulation. Now you look at all these startups. Now these startups, they will innovate. They don't care. They innovate today. The winning company today, the winning startup today, can be tomorrow in court case. It's okay. That's how it works in millennia, and that's how it works in the world of startups. Therefore, if you think that you want to compete with these startups, yes, I totally agree with Mr. Oi, Mr. Goh. All banks, you got all the resources, you got the money to spend. But these startups, they are not go for a direct confrontation with you. They are not going to put in 1 billion. Nobody will put in 1 billion and compete with Standard Chartered Bank. Right? That's for sure. But the problem is, and also the opportunity is, you got so many minnows. You know the minnows? The small fish. There are so many startups, and they are not interested to overtake your legacy system, your core banking. If they focus on wallet, they just focus on wallet. If they focus on payment, they just focus on payment. Like what Dato' Ong mentioned just now. And they make sure they do payment the best in the country or in the region. Now, iklan sikit. That's where iPay came in. I'm also a salesman. So iPay, we do nothing. iPay started in year 2000. It is like 20 years. Until today, 3 of the founders, and now with NTT being our 51% shareholder, we talk nothing, speak nothing, eat nothing, but payment. We talk about payment technology, we talk about digital wallet, we talk about payment ecosystem, anything about payment, including the millennial behavior towards payment. We want to understand them. To that extent. Now, ladies and gentlemen, my fellow bankers, you are my partners. I really value those partnerships. But what I want to highlight is, when you compete with so many minnows and they are doing the best of what a small functionality of what you are doing, that is the danger. That is the danger. That's why Sun Tzu said, art of war, never go for confrontation. Don't mind I share Standard Chartered secret. Let me share with you Standard Chartered's. I've been to Standard Chartered Innovation in Singapore. I've spoken to Ms. Hui Ching. I really admire and respect the way the people, Standard Chartered Innovation in Singapore, the way they do, the way they speak, and the way they behave like startups. So a lot of banks, yeah, you have Maybank have innovation center and all this, but try to visit Standard Chartered Innovation. You'll be very surprised how fast they move like startups. Next. Okay, I want to emphasize here a bit is, digital platform give an outside reach. The reach is so in-depth compared to the traditional banks. You only have the branch. But these people got the phone. And everyone has a phone. And they reach to every corner of the world. Right? And specialists and niche profit maker will flourish. That's confirmed. Because these people only do what they do best. And they only take one small of your cloth lining only, linen, one piece of your benang. You think it's not painful, but if the thousands of them take one benang at one time, that is very painful. Next, the rise of disruption. And you will continue to see disruption. That's the problem with me. The moment I speak, I can't stop. I hope you bear in mind, I actually got another slide here. 13 predictions are very interesting that the bankers must take note. Okay, disruption, the rise of disruption, I don't want to delve in detail. It's proven. You look at so many fintech companies. They are here to play a role, right? And lastly, the rise of digital cash. Never underestimate this. The moment cash is out of the banking ecosystem, I think easily 20 to 30% of your legacy system is redundant. Am I right? Think about it. All right, a quick one. I just want to show you 13 predictions of the future of banking. Increased competition. If you don't believe me, something wrong with you, not wrong with me. Unbundling will continue. It's no longer a package deal. Now the question is a niche, and a niche. How am I going to give loan to the Kedai Runcit who only need 20,000 during Chinese New Year for 3 months? The traditional banks will take 3 months to get the lawyer to give you a letter of offer. These people not interested. There are so many companies that are providing 30,000, 20,000. I work with Aspirasi from Boost. Do you know that we disperse a loan, 150,000, Monday apply, Friday they got the money. Now that is disruption, right? More open and more API. This is very important. What I'm trying to say here is, you don't work alone anymore. Technology will obsolete. Don't think that you own this technology, you become the king for the next of your life. No, the answer is, you own this technology. Can this technology help you to make money or secure market share in 3 months, 3 years? The time frame that you think is justified your investment. That is the key. So you must continue to develop, build APIs. Connect to partners. Don't make all the profit yourself. Now is no longer the old era. Everything you put inside. Right? Remain dominant. Increase specialization. So I no need to explain it. Specialization. Remain dominant. You guys, bankers, you are in this position. Remain dominant. Okay, going to finish. Competition beyond financial services. Better functionality in some area, worse in others. It's okay. You must be good in something. remain trusted advisor. This is your strength. That's what Hui Ching mentioned. The bank still got the credibility, the brand name, and the trust. And that is very important. And okay, more flexible, blockchain will remain aggregator of service, customer-centric, and the best part is unchanged. That means same thing, talk only. Right? So this is the 13th prediction. So with that, thank you so much. And thank you so much.
Thank you. Kok Leong brought out the entrepreneur in all of us and fires us up very nicely, brought up a quite a fair bit of good directions, specialization, niche. When you think about it, it's very nice. You could have a portal giving advice on government grants and loans at the same time as a SME assist. You could have a portal for the agriculture industry, working together with the government in some fashion, dispersing loans to an agricultural or agropreneur community. He talked about social commerce. One of the successful models of social commerce is Carousel, which is out of Singapore. I think current valuation is around 600 or 700 billion Singapore dollars. Social commerce is a very, very, very interesting space because every phone is a merchant and all other services as well. So every phone, it's very good for him. Every phone, you have a person who is able to buy and sell at the same time. Very, very nice insights, but we want to rush off and give the other speakers a chance to speak. At the same time, we want to do some question and answer session. I would like to ask Stephen Wong, Mr. Wong, who is the Chief Strategy and Business Development Officer for China Construction Bank, to give his views on the tech platforms in China who have done very well on inter-country finance and trade settlements. And if he could throw some lights on digital currency as well, that would be nice.
Thank you, Daniel. All right. What I want to do is, please allow me to come down because it's, then we'll get nearer to all of you. All right. Let me ask some questions. I know it's between lunch and, let me ask some questions. How many of you own Standard Chartered credit card? That is for Abrar. That is for our commercial time. All right. How many of you pump Shell petrol? Everybody pump Shell petrol. Everybody owns a Standard Chartered credit card? No? Okay, Abrar. There's a lot of, yeah. And how many of you own an OCBC credit card? Oh, a lot of potential. All right, what I want to try to arrive at right now is, do you know that today when you pump petrol, you don't activate a credit card, you don't activate Shell. All right, there are two brands here. Do you know that you can activate 6 brands at one go, one transaction? All right. How many of you have got a Big Pay card? Big Pay prepaid card, fantastic. All right, for those of you who don't have, apply for one. How many of you have a Boost wallet? Fantastic. Those who doesn't have Boost wallet, please apply for one. How many of you have got what do you call that, a shop bag app? All right, good. All right, shop bag, you can get cashback. All right. How many of you have got a bonus link card? A bonus link app? Fantastic. What do? You use Standard Chartered credit card, OCBC credit card, top up your Big Pay card. Do you know what's a Big Pay prepaid card by AirAsia? You get Standard Chartered, you have got your miles points, you have got your credit card points. All right? You top it up into your Big Pay. And then you use your Big Pay to top up your Boost. What do you get from Big Pay card? AirAsia Big Miles, Big Points. All right, you get free, you can redeem for free flight tickets. All right, use your Boost, go to Shell. All right, what do? Pump your petrol. Every 40 ringgit, you get 4 ringgit back. Correct? Oh, you don't seem to know. Do you know that you pump 40 ringgit, you get 4 ringgit back on your Boost? And on top of that, you get your coins, Boost coins. All right, you get a Boost coins. Okay, but before you go to the Boost, what do? Go into ShopBack. Wire ShopBack, go into your Boost app. All right, what happens? ShopBack is going to give you back cashback. Okay, you clear? Go into your Boost. Boost, when you pump your petrol, 4 ringgit, plus your bonus link, you get bonus link points. Did we activate 6 brands? 6 brands via one transaction? You're following, huh? Am I speaking too fast? All right, just in interest of time. So what is happening today, what you can see today, no single brand can survive alone. All right, simply. That means we have to be part of an ecosystem. That is very important. So the way forward for digital bank, it has to be collaborative. It has to be via partnership. And back to digital bank. Why digital bank? So the thing about challenge in Malaysia today, the mindset, a lot of people still think that digital bank is an upgrade of a wallet. All right, e-wallet 2.0. The answer is no. Okay, you can see a lot of people today, very excited. Touch and Go, Boost. What else you've got? Faith. Everybody wants to go to the digital bank. But do you know that digital bank is, if you don't build it well, it's not going to be profitable. All right? So that's where I'm coming from. Let me explain to you what CCB, China Construction Bank, our strategy is. Let me give you a background. All right? China Construction Bank is owned by Ministry of Finance in China. Used to be. All right? We used to finance all the infrastructure, all the, the rails, the trains, and so on. We focuses on those. That's why it's named China Construction Bank, the name itself. But do you know that today, China Construction Bank is the largest consumer retail bank in China? And how did it come about? It's very simple. We know how to build ecosystem. We finance the infrastructure. That infrastructure, the rail and the trains and so on, requires a payment solution, requires ticketing. That's how we fit in. Build macro, filters down to micro. So everybody who uses a train today in China, they use China Construction Bank. We have got an application called Long Pay. Like Maybank today, Maybank has got a Maybank, M-A-E, all right? CCB, we started a long time ago. Today, Long Pay, after Alipay or WeChat Pay, Long Pay is in Malaysia today, all right? And it's global. So we believe that at the end of the day, when you want to build a digital bank, it's not about focusing on retail alone. We have to build ecosystem. And back to Malaysia, this is what we are trying to build today. CCB is leading a consortium of trying to apply for a digital bank. All right, we are exploring. So what we do in Malaysia is we look at the macro. We finance industrial parks. All right, we finance linkage, communications, or connections. All right, and then we will fit in our smart ecosystem. Okay, today we finance the MacKip, Malaysia-China Kuantan Industrial Park. Okay, that's where it generates the economy. We are the financial advisor for high-speed rail, ECRL, your ETS. So all this, we look at that macro, build it right, and all this will filter down. Okay? Because if you look at it, everyone's trying to build an app, and everyone tries to be a super app. But there's not going to be any loyalty. That's why digital bank of the world today, a lot of them don't have a profitable model. How do you tie them down? Probably the only one that is very successful is Kakao. Correct? Besides Kakao, how many of those out there who's really making money? Because a lot of them are focusing on 2C. But to build a digital bank, we have focused on 2G, 2B, and 2C. Every segment of the customer, all right? And we said to B is just not businesses. When we said to B, we talk about you got the wholesale, the commercial, SME, micro SME. And how do we link this? Export, import. That's why we partner with Exim Bank today, building what we call a regional single window. One-stop center. When you want to export or import, you go through Exim Bank, and we will finance Exim Bank. So we are part of that ecosystem. Okay? So next question is, Bank Negara is looking at, very simple, 2C. 2C is not the middle income group. 2C to Bank Negara is those earning below 2,000. All right? That is where, what are the requirements? Underserved, unserved. And how do we make money? The question is, all the banks today says they are digital, but how many of your account holders, of our account holders today, are those earning below 2,000? Outskirts in the rural areas of Malaysia. So these are some of the questions that a digital bank in Malaysia, they have to really, if anyone really want to build a solid digital bank, we have to make sure that we build that ecosystem, all right? Profit from other segments will be able to cover those underserved and unserved. All right?
Thank you.
I'm done, is it?
Almost, yeah.
Almost, okay.
Yeah.
Let me just wrap it up, all right? A lot of banks today, banks are trying to become fintech. Fintech is trying to become a bank. Well, what actually is the success criteria for a digital bank? 3 pillars. I covered earlier, coverage in terms of relationship. The other part is in terms of technology infrastructures, the technology stacks. Technology stacks, we have got, Silverlake, we have got Sunline, Public Keeper, all right? We have got all the experts there, all right, the technology stacks. The segments is ours, the bank customers. Okay? So for anybody, what is the third pillar that is going to make a digital bank, balance? That means a profitable model. Anyone has any hints or any clues? Okay, very important. A lot of fintechs is missing this component. It's called the CCCR. CCCR, yeah. Triple CR. Okay? Doesn't stand for China something, all right? Basically, first C, controls. Second C, compliance. Third C, credit. R, risk. And very important, these are what we call the governance pillar. And we have to get it right. That is why today, a fintech trying to become a bank trying to become a fintech, both have to collaborate and partner together. All right? With that, thank you.
Thank you, Mr. Wong. Thank you very much. So to recap, you have to have multiple brands. He highlighted the rebate business, whereby Shopback, Boost, working in collaboration with his company. Since we are doing a hybrid session, we have a gentleman, Mr. Tan Kai Chye, who will join us via Zoom from Singapore. He's the CEO of CCR Manager, which is a digital platform enabling banks to manage their capital, liquidity, credit in various forms. He joins us now via Zoom, and we'll hear his perspectives of on our topic, which is the game changer, how it will disrupt banking, how are traditional banks responding, and what are the prospects for digital banks. Mr. Tan, the cue to you.
Thank you, Daniel. Daniel, are you able to hear me well?
Yes, we can hear you.
Excellent.
Yes.
Excellent. Thank you for the invitation. All right. So let me start by saying that it depends on who you ask. Digital banking means different things to different people. All right. As for the next couple of minutes, what I intend to do is to focus on a sub area of digital banking, and that is open banking, which I feel that is going to take on a heightened importance in the years ahead. All right. So let me start by saying, what is open banking? All right. And I kind of like to describe open banking with a simple analogy. And I'm going to take out this little ring of mine. All right. In a normal day, this is a ring. All right. In the world of open banking, I will be able to use this ring, tap on the payment device, and make payment with this ring. This is a Cartier ring. Some lady out there could have a Tiffany ring. I believe in the near, not too distant future, maybe Tiffany already have it, I do not know, all right? You will be able to make payment with the Tiffany ring. Let me use another analogy, all right? And that is, today, if you want to withdraw money, all right, you will go to a bank's ATM machine. Under open banking, you no longer need to use the bank's ATM machine. You can withdraw money from your favorite convenience shop. Could be 7-Eleven, could be something else out there, all right? Finally, all right, in the world of open banking, if you're doing your shopping in Amazon, and you just bought a $2,000, a very pricey 2,000 ringgit a printer, and you need financing. With the same click, you can access your bank to finance your 2,000 ringgit printer. So what does all this mean? It means banking under open banking, you are no longer using a device, a tool that is given to you by the bank. The credit card that you use is given to you by the bank. The bank issued a card. The ATM that you withdraw the money from is given to you by the bank. The ATM machine belongs to the bank. You want to apply for a loan, you log into the bank's internet banking, or you visit the branch, the internet banking website, the branch belongs to the bank. Under open banking, you're able to do all those three services without using bank-sponsored devices. That is open banking. So what does it mean? For the consumer, and a lot been said about the millennia, what it means is it's going to be a complete different experience, all right? I think, the world of the millennia today, they prefer to be a lot more spontaneous, right? They do not want to go into a structured environment, be it a website, that's in internet banking, or a branch to do a banking. If they are in the Grab ad, they would like to do the banking with the Grab ad. If they're in 7-Eleven, they want to do the banking in 7-Eleven. So the whole customer experience when it comes to banking is going to be redefined, especially for retail banking. Now, that is the customer experience. What it means for the digital banks, all right? As we all know, banks do spend a lot of money opening up the hundreds and thousands of branches that we have. Banks are very proud to tell you we have X number of branches all over the country, X number of ATMs all over the country, X numbers of credit cards been issued. It's no longer relevant. Those are money that digital banks going to save because they will not be spending money on any of those. So the cost of operation for a digital bank could be significantly very low. In the earlier session, one of our Standard Chartered Bank FI lady spoke about, I think she said that the jury of internet banking is still, digital banking is still out there, which I actually do believe the jury is still out there, all right? Nonetheless, all right, I think there's a lot of, there's great future for digital bank and digital banking in the years ahead. There's, bashing up the traditional banks is kind of a fashionable thing to do today. Everybody loves to bash up the traditional banks. All right. I think we need not be too harsh on the digital banks. Sorry, the traditional banks. Personally, all right, if I have to make a 300 ringgit transfer from one location to another location, yeah, I will probably just use a fintech platform that is a lot more efficient in many ways and definitely a lot more cost effective. But if I were to make a wire transfer for 10 million ringgit, trust me, I will be doing it by a bank. Doesn't matter what's the cost, doesn't matter how inefficient it is, I will be doing it with a bank. So what does that mean? It means bank has a competitive advantage when it comes to trust. So it doesn't matter how much we like or dislike banks. An average consumer like myself, we trust banks more than we trust any fintech platform. No fintech platforms out there that I know of that is able to compete with banks when it comes to cost of financing. So banks continue to have a second major competitive advantage, and that is cost of financing. It is still the cheapest avenue that for an average consumer, for an average business to borrow money from. Because the cost of financing is so low, the margin is so tight, I think we need to give the bank some slack, right? Rightfully, I believe, they have to be a lot more conservative because the cost of financing is so high, yeah? Now, let me sum up by saying this, all right? I believe the blurring of lines between the traditional banks and the digital banks will significantly blur, or the difference between the two will be narrowed in the years ahead. Let's take a pause, right? At some point in time, for those people that are maybe of the same vintage as me, you will be familiar with the Glass-Steagall Act. In the Glass-Steagall Act, there's no such a thing about universal banking. There's no such a thing about holistic banking. You have a retail bank that will do retail business, and you have the investment bank that will do the investment banking business. The two are being blurred and combined into one called universal banking. Today, we take it for granted. Today, we have this thing called traditional banks, and we have this thing called digital banks. I am quite confident, give it 10, 20 years, the lines between the two will be blurred. The two will coexist for a period of time, all right? They will compete, they will cooperate, but they will coexist. The expansion of capabilities between the two will mean the two will be blurred. There will be M&As as well to cause the lines to be blurred. So let me stop there and hand the stage back to Daniel.
Thank you very much, Chye. Very nice perspectives on the open banking being very efficient for doing banking anywhere, for transfer of payments. Very well highlighted the strengths of the traditional bank being cost of financing. I think my next panelist can throw some light on why the cost of financing is good for very good with the traditional banks, because he has been he has 20 years of experience in banking and finance, treasury, and risk management. So how you manage risk determines your cost of financing to a certain extent. So I'd like to ask Mr. Matthew Chen to give us a few words on our subject. Thank you.
Daniel, can I talk from here? Because I don't know about you guys, I'm too hungry to walk there.
Sure.
I only have 3 slides. First one is hi. The last one is thank you. So joking aside. So maybe a bit about Sunline. First of all, actually, I'd like to thank KSI, for the organizer, for inviting us to the stage. So thank you very much. Very glad to be here. Sunline, first of all, we are not in the business of those car window tinting. We are not in that business, right? Although the name says Sunline. We're actually the largest core banking software house in China, established 18 years ago. We have over 500 banking customers in China. Over the past decade, we managed to help over 100 banks, conventional banks, transformed digitally. Right? So 3 years ago, we ventured outside of China and coming here. So actually, this was my first stop. Immediately, I fell in love with Malaysia for the food. And we actually decided to make Malaysia our regional hub for the Asian region over Singapore. So I hope I don't offend any Singaporeans here. For a number of reasons, right? So we believe that Malaysia has probably one of the largest talent pool in the country. And even talking about digital banking, we're talking about underserved, unbanked, and people, right? We predict that the digital banking space in Singapore is going to get very crowded, right? How many underbanked or unbanked people are there currently in Singapore? Right. So I definitely believe there's a lot more potential in this country over Singapore. So we hire more than 90% of staff internationally in KL. Right. People talking about crisis, right? So obviously we're in the middle of a crisis, this pandemic situation. But we Chinese people like to believe for every crisis, there's always an opportunity, right? You look at 17 years ago when SARS hit China, right? So see, in a way that people's behavior, I think someone speaker actually said, people's behavior is probably the most difficult thing to change psychologically. But everyone back then, 17 years ago, had no choice but to shop online. In a way, actually made Alibaba, right? It really accelerate the e-commerce in China. Jack Ma is a very, very successful man in China, very rich. Maybe if you're talking about, I only have one competitive advantage over him. I think I'm more handsome than him. Yeah, so that to set, where's the clicker? Can I click? I only have 3 slides, like I promised. So in this pandemic, people are talking about, no longer people are talking about cashless banking. People are talking about contactless banking, right? So it's all digital. So I live here in Malaysia by myself. Just during the MCO, you can just see the number of merchants when I actually live on Grab food. I'm alone, I can't cook. I tried to cook for a couple of weeks and then gave up. It's too much hassle. So you can just see the number of merchants went on Grab. So this is a trend. It's irreversible. So the new norm is definitely very digital, and contactless in a way is digital, right? So what is our definition of digital banking 4.0? Everyone talking about, bank everywhere, anywhere, but not at the bank, right? Actually, I like to echo Stephen's point. So our definition is actually broken into 3 layers, 3 circles here, right? You can see. So the first layer, the outside circle, is the channel layers. So exactly to Stephen's point earlier, your banking channels, it doesn't matter, credit card, internet banking, mobile banking, branches, ATM, whatever you name it, right? It's only your channel. It's only just bank channel. It's the tip of the iceberg. If you look at this circle, right, so we're talking about travel, tax hailing, social, gaming, entertainment, everything, right? So these 300 touch points, they are not in your banking ecosystem. A very interesting thing to see is everyone has a mobile, smartphone these days. If you look at your smartphone, you can rank by airtime, by screen time, right? And then you can have a look at your own mobile banking app. I can guarantee you it's the last little tiny dot in the end. Definitely, by far, right? So what is a super app? See, people, this probably is the biggest lesson learned in China. A lot of big banks in China, right? They spend millions, tons of dollars in trying to building this super app, but all failed miserably. Technically, it's not an issue, right? You can use one mobile banking app, your bank's mobile banking app, trying to tap into tax hailing, e-commerce, and so on and so forth, right? Hoping that people actually using your banking mobile app as a super app is never going to happen, right? The example I already given, it's never going to happen. So echoing to Stephen's point, it's all about collaboration. Fintech, tech thing, it doesn't matter how we read it, right? So the bank's trying to be tech company and the tech company trying to be banks. We've seen that already, right? So you might wonder how many of those digital banks are going to survive in Singapore. Give and take 5 years, you watch and see, right? See this space. So collaboration is the key for the outer layer, which is our channel layer. So actually, your example, very good example, right? So you're banking through your partners. If you're talking about mobile app, you're banking through your partner's mobile banking app. You onboard through other people's, third parties' mobile banking app, because there's no way you can drag them into your bank. And again, psychologically, I don't know about you guys, right? So when I log onto my banking app, I try to stay on as little as possible. Why? You don't feel safe, right? Other people might hack, right? So you try to stay on your mobile banking as little as possible. So it doesn't matter how many marketing dollars you put on your banking app, never going to work. So you partner through and with your third party's ecosystem. So that was your point, really, right? So the second layer, so people saying I'm from a treasury and risk management background, right? So what is bank, right? At the end of the day, I think all the dust was settled. I think some speakers said that at the end of the day, bank, at the end of the day, is about what? Bank is about managing risk, about making money through managing risk, right? So the second layer, actually, we call it the brandy layer, right? So the decision-making layer, analytical layer. So people are talking about, in China, we've seen it, right? It's no longer conceptual format anymore. It's all live and kicking. You have many banks done that, using big data and AI in what? In precise marketing and also in risk management, right? I can give you an example of that. So you probably heard of this bank. WeBank is actually, underneath the Tencent group. And by the way, Tencent is actually also one of our shareholders. So this bank is one of the first digital bank, and I dare say that's probably also one of the most profitable and successful digital bank on this planet. They acquired a banking license at the end of 2014. So it took us about 6-7 months to help them to launch the digital core banking system with them. So today, shy of 5 years, right? 5 years in operation, they've achieved over 100 million customers. With how many products? One product. So very, very disruptive to traditional banking's mindset, right? So you mentioned about the young millennials thinking very different. Simple is beauty, right? So I was a banker before in Australia. If people are talking about selling your customer up to 7 products to try to create a stickiness, it's no longer the case. All you need is just one wow factor. So what they did is they target in Shenzhen. I don't know whether you know Shenzhen is the Silicon Valley now in China, and the property price really shooting through the roof, right? So they target at the young graduates. People just graduate from university in Shenzhen. They cannot afford to buy, so they rent. But even for the rental, that first down payment. So imagine the guy just got his first paycheck, or just got a job offer, haven't even got his first paycheck. We're talking about 3 months of rental plus 2 months rental. So 1 month's rental in Shenzhen average about 3,000 to 5,000 RMB CNY, right? For 3 months, so you're talking about 5 months rental, right? So that's 3, 4, 5,000 multiplied by 5. Even for that small ticket item, they can't afford. And definitely a traditional bank would not loan to these people. But using big data, precise marketing, that's possible. And then you can look at the cost, IT cost per account, 40 cents US dollars. Right? And the time to market, 11 days, for able to push out new products into the market to see. Right? So that's what WeBank did.
Thank you, Mr. Chen. Very nice insights about.
Sorry, I'm not finished. My time running out, is it?
Yeah.
Still got 1 minute. Okay. So the other example I want to give you, also how we do big data, using big data on risk management. One of the very oldest bank in Shenzhen is called Shenzhen Development Bank. I don't know whether you heard of it. When Mr. Deng Xiaoping decided to open door, that was the policy bank, which was established 33 years ago. It has the largest SME supply chain finance in China. So when people talking about China as the world factory, there's a lot of factories actually in Shenzhen. So how do? We actually start a journey by building a post-loan alert system. So people talking about big data, right? So how big data in action? So not only you're pulling from the credit bureau, central bank, and all of that structured data. One of very important unstructured data that will pull from outside is litigation data. China, the High Court actually passed in 2015 a mandate that right now, as long as you're being sued by another person or any company sued by another company, that information, the minute you open a case, it doesn't matter how lower county court it is, right? China is about 5,412 courts in China. Even the lowest county level, they will publish their case in their official website. So using natural language processing AI methodology, you'll be able to collect this data. Not human, not possible, right? Because we're talking about over 20,000 URLs in China. So using that statistical modeling coupled with the external data, we'll be able to predict the risk management. So that's how we do big data in risk management for actually one of the largest banks right now. It's called Ping Bank. Ping Bank actually acquired Shenzhen Development Bank. So you might ask, this is very well in China, right? So what about this part of the world? So what you're looking at, without naming the name, is actually a local Malaysian bank opened up a brand new digital bank in Philippines. So it's a greenfield bank. For them, they had nobody there, right? So they got a banking license towards the end of 2018. So now it's 1.5 years down the track. We clocked over 2.2 million customers already from zero, right? So how do we do that? Again, collaboration, right? So using eKYC, face recognition, video eKYC and face recognition, we'll be able to onboard, within 10 minutes, right? In China, we'll be able to onboard within seconds, but 10 minutes is good enough. And then what we did is, to handle the cash out, we hooked them up with over 20,000 ATM, other banks' ATM network through the whole nation of Philippines for free, right? Because they save all the infra. And then cash in and all the aging banking, hooked them up with 8,000 over 7-Elevens. So we've handled all the cashing. Again, a lot of savings. All the bill payment, all the utility and all that, hook them up. They also helped them hook up to one of the largest e-wallet in whole of Philippines, which has millions of active users. So they be able to weave their smart saving product in the active e-wallet so that people, a few clicks, they become their customers. Now they can earn interest on their wallet, right? Which is not possible with a wallet. And then even during the pandemic situation, we even helped them to push out like a 12 months interest-free loan within 2 weeks, right? Very fast to market. Last slide. So people might say, okay, that's very good, very well for a green bank, a new digital bank, but what about legacy bank? I'm legacy bank. I have my legacy system, so what do you do? So there are the typical 4 approaches in all of these 100 banks we have done in China. And also the 12 banks we have helped to transform over the past 3 years in ASEAN region as well. So you might be saying, I'm happy with my current system, so you just do a patching. But in a way, the patching is only the outer layer. It's only digital. You're not changing the core, right? So our experience found out that if you don't change the core, it's actually quite difficult because the foundations are different. We're talking about microservices. We're talking about distributed architect. We're talking about how you're going to weave not only your product, your systems in a lot of little guys or ecosystem partners, their software systems. So it's going to be very difficult. But anyway, a lot of banks actually went down that path. And some other banks say, okay, I'm happy with my current vendor, I'll do upgrade, right? But we see a lot of these 100 banks in China and also the 12 banks we've done in Asian region, they said, I'm actually not happy, right? I'm not happy, I want to change, but a big bang approach is too risky. So I don't want to do big bang. So the big bang replacement model is very risky. As you know, that migration is risky. So we actually invented a model, we call it a dual core, a complementary core approach. So imagine we build a little wee bank, a little internal digital challenging bank within your bank. So target at the new to bank customers first without any disruption to your existing to customer. So it's an add-on. And then once the customer, say your existing customer like the experience in the digital core, they will able to migrate themselves over. So which makes that migration risk to the minimal. And in the end, you're only left with very small amount of corporate banking customers that you do the big bang at the end. So we really minimize the risk. So that's a graduate replacement methodology that we impose in a lot of these banks. I promise you the last slide is a thank you. So there you go. Thank you very much.
Thank you, Mr. Chen. Thank you very much. Very interesting insights on how a bank can go from incorporation in 5 years with 34 billion in assets, net income of 1.4 billion at the end of the year, That's very good. Then the other example in Philippines, going in December 2018 and having onboarded 2 million new customers. That's also very good insight. We would like to maybe ask anyone from the floor if they have any questions before we wrap up this session. I believe everybody is hungry as well. So if there are any questions from the floor or from Zoom. Oh, okay, please.
Thanks, Daniel.
Because we were supposed to do, we ran off on time. So, okay.
Yeah, we had a chat outside before this, so I guess some of the Q&As were done. But anyway, so privileged to be among giants today, legends, right, today. So KiplePay, right? We've been hearing a lot about us in the last couple of months, probably in the news. We launched a lot of initiatives, a lot of programs, right? So what I want to share with everyone today is basically a digital bank story for the little guys. I think Stephen talked about collaboration, talk about to G, to B, to C, right? And going to the C, the segments are below an average income of 2,000 ringgit a month, right? And then how do we collaborate? So what better way for me to share than a use case of something we actually did, right? So 2 years ago, we launched a government program with the Selangor state government. The objective is very simple, right? It's to go down to the grassroots, right? To give welfare aids to a group of B40 recipients, single mothers, right? Or even poor families with an income of 2,000 ringgit or less a month, right? So we thought, okay, this is a great opportunity for us to white label our cloud wallet and to have a unique front end, which is a card. And we distribute this to the recipients. Now, the opportunity here for us is actually to, how do we grow the ecosystem, right? With the amount of money being distributed out to the market, to this segment, how do we then help the ecosystem around the rural Malaysian areas to grow, right? And part and parcel of the solutions that we rolled out is about transparency and control, right? How do we drive digital recruitment submissions, right? From B40 segments who are not digital savvy, and how do we then educate them to enroll online, eKYC them, and bring them on board, right? We have to do the same for merchants as well. So there's a lot of B40 merchants, your kedai runcit Makcik Kia, kedai Pak Abu, right? Who doesn't even have a POS system, have no idea how to collect digital payments. And we went down to the grassroots to actually onboard them, right? Of course, it's a long process where we have to educate them about the system. Now, part of the requirement of the programs that we did for Selangor, Perak, and Kedah is that the funds are not allowed to be spent on non-necessity items, right? So we work and collaborate with POS partners to develop a software for the POS where it only allows transactions for whitelisted goods. Now there are 20,000 whitelisted goods under the KPN control items. And these are, you can see on the screen, these are some necessities like your rice, the meat, and so on, right? So we have to control spend, and we have to be able to provide a real-life update in terms of the expenditure and price monitoring for these items, right? So this is what we rolled out. Not moving. Okay, so what we found interesting here is that when we go down on the ground, I mean, being able to distribute the funds is great, but what we really felt motivated here is we are able to onboard more than 25,000 grassroots merchants, right? All over the 3 states. And we did this over the period of 3 months. And I think I have to thank the team for being really, really hands-on on the ground, where we had gone through a lot of talimat sessions, education sessions on how to educate merchants on how to use POS, right? So 15% of the 25,000 merchants we onboarded are your chain stores. They probably have post systems, post networks, right? Whereas remainder of them actually have never used a post system before, right? So what we introduced to them is a micro post, right? Some are tablets, some are small post systems, where they are then trained to operate the products uploading and so on. And I think this is part and parcel of what we do from a payment acceptance perspective, right? And with these merchants, we also rolled out our payment solution, right, for them to be able to accept payment. Now, what happened during this last 3 months is that we had a lot of requests from these merchants to come in, requesting for cashless payment, right? My customers are having issues coming to my stores. How am I going to receive orders? And how are we going to apply for financing? I need financing loan assistance. How are we going to do it? So we thought, okay, it's time for us to stack up the solution. And I think it's also time for us to explore deeper partnerships with other FIs and banks, right? On how we can deliver more meaningful services down to these grassroots merchants and also users. So what we are doing is we're going to have a full-fledged, what's next is the full-fledged eKYC module, and also profile validation process, where we are able to do credit checks and do instant approval for applications, even for the subsidy cards, or even for bank-related bank services, right? So what I'm really hopeful is to be able to partner with more banks to go down to the grassroots and to offer services to them. Right, and also what we want to roll out this year, and we are quite excited about this, is also simplicity in transaction, right? And from a mobile payment perspective, we are looking to replace the traditional POS with just a mobile app on your phone, right? And this is pretty much like what the gentleman earlier said, open banking, right? So it's a neutral platform. We would like to be bank agnostic when it comes to the solution stack. And we would like to be able to partner with a lot more banks to roll out to different segments in the market, right? Where we have different customized solutions for various verticals of industry, fashion, retail, food, F&B, and so on, right? And this is something that we are quite passionate about. There's a lot that we are doing in Green Packet and KiplePay. And what I'm hoping to do is to be able to give you a preview to what we are going to launch and kick off in the next 2 weeks, right? So we're going to have something big coming soon, and I hope to see you guys there as well at the launch event. So what I'm going to review here is basically a whole new ecosystem, right? Which is cloud enabled, that is able to just function and to deploy via the internet or through your mobile device, right? Great. So yeah. So hopefully, we can have a fruitful discussion of this.
Thank you very much, Ricky. So to recap, we've done very well. We've got a lot of good insights today. We started off with Mr. Anwar, who basically told us the strengths about the bank's traditional strengths, the role Stan Chart is playing in the digital space, and the investments they have done, the way they have participated with the new fintech partners. The other strengths of the traditional bank basically being cost of capital, risk management, the whole entire process and logistics chain, very easy to adapt. So they are not really legacy as much. They could deploy very quickly and work from home during the MCO. And so we got a little bit of insight there. We also learned from Mr. Goh that we are actually trading habits, and those habits make the economy. And if we can identify which direction those habits are evolving, we will probably have a good trade in the future. And the future is very, very uncertain. It has changed. And we have to adapt to that uncertainty, because that is the only thing that is certain. We have to build more APIs. Mr. Chen, Kok Leong basically brought out the entrepreneur in all of us, and he told us exactly where we should be looking, where and how we should be looking to deploy strategies, preferably very niche, very, very specialized, very, very focused. Huge amount of opportunities are out there, and they are going to get even better. Look at spaces whereby social commerce, look at spaces where, look at the areas where there is a problem and go in to try to fulfill and fix those problems. So it could either be in the agripreneurs sector, it could be in the SMEs, it could be microfinancing, it could be individual financing. But there are niches that we should actually look at, and we should go into those areas. And there's a lot of opportunities ahead because the world has changed. Post-COVID is an entirely new ball game. And really, it's very factual because there are a lot of changes, but we cannot also at the same time look at saying that those are the past and it is not coming back. For example, with the rise of e-commerce that we have seen in the last 3-4 months, beautiful rally to the upside for a lot of companies. People became very, very rich. Amazon saw $70-80 billion improvement in weeks and sometimes a couple of $1 billion in days. But that doesn't also mean that the retail sector that we know of, the physical sector that we know of, is going away, because that will drastically change the economy, and we probably are in some transformative phrase till we figure out about COVID, or whether COVID is going to go away. It's not going to go away. It's going to be resolved. But we are definitely all, I think, in agreement that what has happened now is the worst that we have ever experienced, and it has transformed everything going forward. We heard from Mr. Wong to basically telling us that we should be building multiple brands. He gave examples of Shopee, he gave examples of Shopback and Boost. And then we heard from Mr. Tan in Singapore, who told us about open banking and how so we hear this open banking and building more APIs and trying to integrate with multiple different players, whereby delivering more efficiency in the whole process, whatever that process could be. We also heard about how even having a 100-year history may not be good enough, because you have a digital bank who is just created 5 years ago, or just created 2 years ago, and they have done very well by partnering with other players in an open fashion, which a traditional bank will probably have a little bit of hesitant to do because of sharing of data and access to that. And we heard about the merchant solutions and the customized solutions from Ripple, from Ricky, and so what we have now is we have a very good direction and understanding to a certain certain understanding of how this whole thing has evolved. At the same time, it's not game over for the traditional banks. It is not the fintech guys also out there who are going to probably be winning all the time, because the traditional banks are still very well funded. The real and everything that we are seeing now is very dynamic, data driven, and because you have a lot of data, the data tells you what is working and what is not working, and customer orientation should be the main focus. And with that, I think I conclude this session. Thank you.
Very big thanks to